Aloha. I'm Jason Wong, principal broker at Island Dragonfly. You know, people always ask me, Jason, Japanese buyers just pay cash for everything, right? I mean, sure. In the movies, maybe. But in the real world, where the yen has been taking a little, let's call it a nap, against the dollar, cash isn't always king. Sometimes cash is just expensive. So if you're a Japanese investor eyeing that luxury condo in Kaka'ako or that beachfront stunner in Lanikai, and you don't want to convert your entire life savings at a painful exchange rate, how do you actually buy paradise? Buckle up. We're looking into the two roads to financing Hawaii real estate, the local route and the samurai strategy. First up, the local route. Can you walk into a bank in Honolulu and get a loan? Yes, but don't expect a warm hug and a 3% interest rate. Hawaii boasts some incredible lenders who specialize in what we call foreign national loans. The big players here are usually First Hawaiian Bank and Central Pacific Bank. They know this market better than anyone. But here's the truth. They don't trust your credit score from Japan. It doesn't exist to them. So how do they protect themselves? Down payments. You're not putting down 5% or 20%. For a foreign national loan, expect to bring 30% to 40%, sometimes even 50% in cash to the closing table. And the interest rate? Add a foreign national premium to whatever the current US rate is. It's the price of doing business in paradise without a US social security number. Key takeaway, you need liquidity and you need to open a US bank account in person. Yes, you actually have to fly here to sign the card. Rough life, I know. Now let's talk about option 2, the samurai strategy, or keeping it domestic. This is often the smarter play if the yen is weak. Why borrow in dollars at 7% when you can borrow in yen at, well, Japan rates? Some Japanese buyers use institutions like Tokyo Star Bank or SMBC Trust Bank. Here's the trick. A US bank generally cannot foreclose on your house in Shibuya. They can't reach it, but a Japanese bank can. So savvy investors often take a loan out in Japan using their Japanese properties as collateral and bring the cash over to Hawaii. To the seller in Hawaii, you look like an all-cash buyer. You're powerful, you're sexy, but back home, you're still financing. It's the best of both worlds. If you have the assets to back it up, before I let you go, a quick please don't do this. Do not try to bring 30% of a purchase price in a suitcase. And do not think you can transfer millions of dollars overnight without triggering alarms. The US and Japan have strict anti-money laundering treaties. If you can't show exactly where that money came from, the only thing you'll be buying is a lawyer. Look, financing a cross-border deal is like sushi. It requires a skilled chef or it's going to leave a bad taste in your mouth. Whether you're looking to park capital, buy a vacation home, or diversify your portfolio, you need a broker who speaks the language of numbers and luxury. I'm Jason Wong. Let's connect when you are ready. Don't just dream of Hawaii. Own it. Aloha.